Hey, hi, this is Gautam. I'm back. So in this video, we learn how to quickly analyze a balance sheet, right? So I have made rather detailed videos as to how to analyze financial statements. But in this video, we'll just focus on the balance sheet and we'll learn how to analyze it quickly. All right, so let's start. All right, so first let's understand what is a balance sheet. Okay, so balance sheet is a financial statement, okay, that tells you that at any point in time, it summarizes how much you owe, that is kitna udhari, how much you owe, okay, and how much your own money you have put in the business. All right. So how much you owe and how much equity is there in the business at any point in time. Okay. And these are also called the sources of funds. And using your sources of funds, okay, how much have you owned? How much worth of assets have you been able to own over time until now? Okay. And this is called the application of funds. Okay. Say, if you started a business 5 years ago, okay, you put in some of your own money, that is equity. You borrowed some money from the bank. So that was the source of funds. Okay. All right. And then over a period of time, you took more loans. The business generated profits. So those profits keep on getting added back to equity. Okay. And then using all those sources of funds over time, you built some assets. Okay. So balance sheet at any point in time, it summarizes cumulatively how much you owe, how much worth of equity you have, and using these sources of funds, how much worth of assets you have been able to build. Okay, so very simplified definition for balance sheet. All right, now let's pick up a balance sheet of a company and let's analyze it. Okay. All right, so the company whose balance sheet we're going to analyze is Agarwal Industrial Corporation. That's just an example. If you learn how to analyze balance sheet, let's say of this company, you learn how to analyze balance sheet of any company. All right. Okay. And by the way, on Agarwal Industrial, I've made a detailed video on the analysis and valuation of this company. So perhaps I'll link it here. Okay. All right. Okay. So before you analyze balance sheet or you analyze any aspect of a company, all right. So the first thing that I usually do, if in case that company publishes investor presentations, all right, to first click on those investor presentations because that's going to give you a very good sense about the company. All right. So I have the investor presentation open. So let me give you a very quick download about the company. So this company, what it does is it imports bitumen from Gulf countries and it imports it into India and sells it to different road construction companies in India. Okay. And it has its own ships. It imports bitumen through its own ships, as well as it uses ships from third parties as well. All right. Okay. Now let's go further. Okay. So if you see this chart, okay, what this chart is telling you is that over the last 5 years, the company has purchased a lot of ships, a lot of vessels to import bitumen into India. Because if they use their own ships, it's cheaper vis-a-vis if they use a third party ka ship. All right. Okay. So if you see, they have bought a lot of ships. Okay. And the reason I'm focusing because I can draw a connection with the balance sheet. Okay. So if you see FY23, they purchased 3 ships. All right. Okay. So now let's open up their balance sheet. Okay. All right. So I have the balance sheet of this company open. This balance sheet is as of 2023, end of financial year 2023. And this is in lakhs of rupees. All right. Okay. So see, balance sheet analysis, it helps us understand capital allocation over time, how the company has allocated capital, how they have used capital over time. All right. Okay. So through this analysis, we'll try to answer 4 questions. Okay. All right. So towards the end, we should be able to answer 4 questions. One is A, what are the sources of capital? Okay. And the sources could be, say, they have raised equity from the market, or they have used their own profits. That could be a source. They have raised borrowing from the bank, udhari li hai, okay, or they have used their own cash in the bank. So it could be, the sources could be, and it could be a combination of different sources. So first is, what are the sources of capital? That we'll try to answer. To what extent they have used those sources of capital or funds? That is 2. Okay. 3 is how they've applied or used those funds. For example, they could have bought new buildings. They could have purchased new plants. They could perhaps be foraying into acquiring a different company. All right. So how they have applied or used those funds, that's 3. And 4th is what line items, since this would be a quick analysis. Okay. So we'll have to also put some items in the parking lot what I mean is we'll also have to identify a few items, line items, मतलब few entries in the balance sheet which need further investigation, which need further digging. Okay, right? Okay, so that's four, and also we'll summarize our analysis up top. यहाँ पे we'll summarize our analysis कि what is it that we've concluded. Okay, and then we'll do the same process for the last few years balance sheet as well, and then we'll look at the headline across all. Okay, all the analysis. Last year का balance sheet का क्या crux था, conclusion था, this year balance sheet, what are we concluding? All right, then it will make a story what has really happened with that company. All right, okay, so let's move forward. Okay, so see balance sheet. So let's start with the equity and liability first. So equity, as you know, okay, this is source of capital, source of funds, source of funds. Okay, all right. So here, if you see equity share capital has slightly increased. Okay, and by the way, one thing. Okay, since this again, I'll try to make this quick. So we will only, for the purpose of this analysis, we'll only look at those line items that seem to have significantly changed between FY22 and FY23. Okay, all right. So we'll only look at those big ticket items that seem to have significantly moved. Okay, all right. अच्छा, तो यहाँ पे we see equity share capital, it has changed from 13 CR to 15 CR. Yeah, see, I know I said I'll only focus on those line items which show a significant movement between the 2 years, but I'll just make an exception in the case of equity share capital. Okay, so let's solve this small movement from 13 CR to 15 CR. If you just read through it, this is 13 and this is 15. All right, so let's just read through 15A because I'm very curious to see as to how they raised more equity. Okay, so let's go and check the notes. Okay, so here in the notes, okay, so if you read through this, if you read through these notes, okay, it says so looks like there was some conversion of warrants that were issued to promoters that resulted into issue of new equity shares. And what is a warrant, by the way? So see, stock warrants, they represent the right to purchase a company's share at a specific price at a specific date. I would say they represent the right to purchase a company's stock at a heavily discounted price, okay, at a specific point in time. So see, issue of warrants, एक बार, once it's okay, but if this company has been issuing warrants, many a times, then that's not a very good sign because it represents that promoters are not very minority shareholder friendly. Okay, because you're essentially are able to buy a stake in the company at a very discounted price. Okay, rather you would expect if you want to increase your ownership, you would expect the management to buy it from the open market. All right, and if they want to really infuse capital in the company, right? It's right now it's small, right? They should only 2 CR worth of they infuse only 2 CR worth of capital. They would have taken a loan, right? They have a very high credit line. All right. So any which ways, I just wanted to, and plus the other is that they also acquired their own subsidiary, which also resulted into issue of shares. All right. So any which ways, it's important to keep track of how the company is actually issuing new shares. All right. So let's go back to the annual report. Okay. So let's look at overall equity. So overall equity, it is 295. Say it has become 407. 404 CR. Okay, I'm talking about CR. Okay, so basically what it means is the total equity or the total equity which is largely driven by retained earnings, other equity, मतलब खुद का profit जो उन्होंने कमाया, that they've added to other equity. Okay, because profits keep on getting added to equity. Okay, so there is a 109 CR equity addition. Okay. All right. Matlab, they have, through their profits, their own profits is one source of capital. All right. First source. Okay. Next is, if we go down further, now we are entering liabilities. Okay. Liability meaning, anything which actually company ka khud ka nahi hai, the company owes that to someone. See, your liabilities are of two types. One is the non-current liabilities, which are your long-term liabilities. And then your current liabilities, which are short-term liabilities, which are due in 1 year. Okay, so long-term examples like they have like borrowings. So any long-term borrowings, any like loan or udhari they have taken from bank, which has a term of more than 1 year, that is the long-term borrowing. Similarly, talking about other financial liabilities, okay, so any examples could be any security deposit that they have taken from a company that they are working with. That could be an example of other financial liabilities. Provisions, like long-term provisions, any example could be any employee gratuity, okay, that they need to pay out to their employees. They have booked that in the P&L, but they haven't paid their employees that gratuity. All right. So, and again, and talking about current liabilities, so any short-term borrowings, uh, which are due in 1 year, they are like short-term borrowings. And then trade payables, any payments to suppliers which they have withheld, which they have not paid out yet. Okay, so they are trade payables. Okay, and other financial liabilities and other when they examples of current other financial liabilities would be any payments that are due in the short term to employees, right? Okay, like they may have booked the salaries that they pay to their employees, but they may not have paid them in full yet. Okay, so that non-payment of salary would occur here. They have booked it, but they have not paid them yet. All right. Okay. So on and so forth. All right. Okay. So let's go ahead. All right. So any which ways, so pehla, let's look at non-current liabilities में. If you look at borrowings, okay, borrowings में, so borrowings में it was 31 CR, 31 CR, say it has increased to 69 CR. Okay, that means borrowings long term में there is a 39 CR, there is 39 CR borrowings uptake addition. मतलब the company has the other source of capital is company has taken some udhari, taken some borrowings from the bank. Okay, and details of those borrowings you could look at this note 16. If you scroll down further, okay, in this annual report. Okay, then let's look at lease liability. See, if a company is leasing out or is taking a building or a land, okay, on rent, then as per accounting, now they're required to show it as debt on their books. Okay, this is just accounting. Earlier, they had to expense it in the P&L, but now they're required to show it as debt. And in the asset side, they have to create a right of use asset. Again, let's not getting there, but that is perhaps for another video. Okay, but let's not worry about lease liabilities because it gets whatever increase or decrease in lease liability takes here. There is a opposing entry in the asset side. So let's just move forward. Other financial liabilities is too smaller numbers, so let's not worry. Provisions again is too smaller number, but again, let's keep it in the parking lot. We can look at it later. Okay, because some items obviously would need further digging. So let's iska note, you can look at it later. Okay, deferred tax liability. Again, that's tax. Let's just move forward. Current liabilities. Okay, this is an item I'm just more concerned about the big ticket items. These are like your short-term borrowings. Short-term borrowings from 105 CR, they have reduced to 68 CR. Iska matlab 46 CR worth of short-term borrowings have come down. इसका मतलब totally 39 यहाँ पे this 38 I guess whatever 38 39 CR borrowings have gone up. Niha 46 CR borrowings have gone down. So totally it means company has paid down their debt overall. उधारी कम करी है थोड़ी सी. Okay, all right. But anyways, we'll do that conclusion later. Okay, all right. Lease liabilities again. Let's not worry about it. Trade payables. Okay? Trade payables I think is interesting. So if you look at trade payables has increased from 55 CR to 164 CR. Okay, that is, it's an increase of what? 109 CR payables increase. Okay, all right. What it means is the company is withholding payments to the suppliers. That's what it means, and it's a huge amount. All right. So immediately when you come across something like this, what you should do is you should also look at the days of payables outstanding. So let's you can calculate it, but if you have it handy, then let's look at it. So if you look at the days of payables for this company, in FY22 it was 15. That is, they were taking 15 days on an average to pay off their suppliers. But now in FY23 they're taking 36 days to pay off their suppliers. It's a marked increase. It's more than 2 times. Okay. So see, in the short term, it's totally fine that you are withholding payments to your suppliers. It would actually, your working capital would reduce. It will be positive on your valuation as well, but that's momentary. Okay, because in the long term, it does more harm than good, because your suppliers may not want to do business with you if you are not paying them on time. They'll rather do business with their competitors. All right, so that's something that to make a note of. All right, okay, now let's get back to the balance sheet. All right. So now going further down in this equity and liability side of the balance sheet, if we go further down, okay, we notice there are two items: other financial liabilities and other current liabilities. There has not been a marked movement in both these two items. Okay. So let's keep both of these items in the parking lot. Obviously, we need to look at the notes 21, 22 to see what are these at the first place. Okay. But they're not really impacting our capital allocation because they are not huge right now. Okay. So let's park them for now. Okay. All right. So mota, if you just make a note down of all these significant movements, okay, one is plus 109. That's their own profits. They have increased their borrowing by 39 CR. Then the next one, big ticket item, is they've reduced their borrowing overall. So that means they've reduced their borrowings. Okay. And then they have increased their pay bills. They have withheld cash. Okay. So totally, this is around what? 210, 211. Okay. All right. 211 CR. That's the total source of fund. Okay. And actually, obviously, you should look at this. Total, this is to 543 and this is 750. Total change जो आया है 3. So total change आया है, that is 207. So it's roughly around that same number. I'm concerned about speed over precision. Okay, I'm not worried about precision right now. Okay, so this is how the equity and liability side of the balance sheet has moved. All right. Okay, now let's go to the asset side of the balance sheet. All right. So here as well, let's only focus on those items which have significantly moved between FY23 and FY22. And some of the other items, we'll put them on the parking lot, which we'll look at the notes and investigate them later. Okay. All right. So here, if you look at PPE, so see, there are two kinds of assets. One is your fixed assets, your non-current assets, and the other is your current assets. Non-current assets are your, like, there's fixed assets, mota. And your current assets are the ones that, you, for example, inventory, receivables. Okay. Receivables, meaning you have booked a sale, but the customer has not really paid you yet. And you expect the customer to pay you within 1 year. So that's a current asset, okay, on your books. All right. Similarly, inventory, okay, you have the mal, you have the inventory in your warehouse, in your godown. Okay. You have not sold it yet, but you expect to sell it within 1 year. Okay. Again, so any which ways, first let's look at some of the big ticket items in non-fixed assets. So first is PPE. PPE, your property, plant and equipment, it seems 190 say, it has moved to 317. So it's a 127 CR ka jump. Okay. And this 127 CR jump, remember that in the beginning of the video, I had showed you one chart in which they had invested in 3 ships, in which they have bought 3 ships this year, right? So what it means is कि 127 CR worth of capex they have done on those 3 ships. They could have bought more stuff, but mota, it looks like कि 127 CR ka capex has happened on those 3 ships. Okay, all right. And actually, honestly, 127 CR is slightly understated. I'll tell you why. Because this is net PPE. Okay, matlab gross PPE minus depreciation. Again, not getting there, but ideally you should look at this note 2A and find out what is the overall increase in capex. It would be a little more than 127 CR, and you'll get to know how much capex they've done. All right. Okay. All right. Now moving forward, there is something called capital work in progress. It's smaller number, but it's like capital work in progress, meaning whatever construction activities that they have done. Once they finish construction, they'll create an asset. That asset will get added to their PPE. All right, but it's too small a number. Let's not worry about it. Investment property is too small a number. Then again, right of use asset. Again, it's just an corresponding accounting entry to your lease liability, which we already discussed briefly. So let's move forward. Goodwill and consolidation. Again, it's too small a number. It hasn't really moved at all. Okay. But yes, goodwill is interesting. So I'll pick up an example on goodwill, in perhaps another video. All right. So anyways, so here, if you see, I think except this number, financial asset. Okay. This again is small. So let's keep it in the parking lot. This needs to be investigated. What's happening here? It's again 6 CR and 4 CR. So 2 CR ka movement. Let's just put in the parking lot. Doesn't really impact us too much. Okay. For now. All right. Then let's move current inventory. Inventory has moved from 65 CR to 116 CR. So what it means is inventory may there is a 51 CR ka jump. Okay. And then receivables, 161 CR, 194 CR. So it means receivables mein there is a 33 CR ka jump. Okay. Immediately once you look at that, okay, let's look at their days of inventory and receivables outstanding and see what has happened. So यहाँ पे if you see the receivable days pretty much has stayed put. Okay. So the increase in receivables is commensurate with the increase in sales. So it has stayed put. Matlab their customers are paying them in the same payment terms which they used to pay earlier in the prior year. So it's not a cause of concern. Inventory days, has actually increased. Okay. So they have more inventory on their books than what they had now. Okay. So prima facie, without any like further digging, it kind of gives us an impression that perhaps, mal bech nahi pa rahe hain, whatever. So that needs to be investigated. But yeah, it needs to be investigated that there is a tangible jump in inventory days. All right. Okay. Now let's go back. Now let's move further. So if you look at the cash, okay. So these items from 46 CR to 29 CR reduction hua hai. So there's a 17 CR worth of reduction in cash. Okay. All right. And then some of the other items, they are like insignificant, except this item, other current assets. Okay. But it has not really moved. 23 CR say it has become 25 CR. So those CR ka let's not worry. But yes, when I say not worry, doesn't mean that you don't have to look at the notes. You have to read the note and find out as to what is it. Ye hai kya, ye cheez. But let's park it. Okay. I know our parking lot has a lot of items now, but we'll get to that later. All right. So now let's conclude. So abhi humne kya dekha? 127 CR ka, there's a capex uptick. Plus 51 CR ka, there is inventory. Plus 33 ka, there is receivable. Minus 17 CR, cash reduction. 17 CR, there is cash reduction. Totally 194 increase in assets. So what it tells us is that around 200 source of funds have funded your capex, 127 CR. Okay. It has also funded the increase in your inventory as well. Okay. So how do you conclude? How do you summarize what you just saw? See, we had like 4 questions that we needed answers to, right? So our sources of capital, what are sources of capital? Our sources of capital are their own internal accruals, that is their own profits, which is a very good sign. Two, the second source of the capital is payables, okay, which is not desirable all the time because they are withholding payments to the suppliers, but that's a very cheeky, sly thing that they have done. Okay. So that's the second source. Okay. And then, so those are 2 primary sources of capital, let's say. All right. Okay. And plus, actually, third source, which is small, is the cash, because there is some cash that has depleted from their books. So third small source of funds is their own cash. Okay. So these are the sources. That's the first question that we've answered. Second question is, to what extent they have used their sources. That also we've answered. To what extent they have used the sources of capital of funds. Now the third question is how they've applied or used those funds. See, how they've applied is they have bought these ships, 127 CR capex. They have used those 200 CR worth of funds to fund their capex and plus to fund the increase in inventory, mota. Okay, all right. And which line items need further digging? The ones that we have in the parking lot. Uska notes aapko jaake padhna hai. All right. So we've tried to answer all the questions. Okay. And now let's summarize. I know summary is incomplete without digging into our parking lot, the line items which are there in the parking lot, but still let's try. Okay. So the way I would conclude is internal accruals worth 109 CR plus payables worth 109 CR, okay, have funded the 3 ships, okay, and the rise in inventory. That's what it tells us, mota. All right. Okay. And then you need to do this for all the past year balance sheets as well. Let me show you, because I've done that ahead of time. Okay. So let me show you, and you will see nice story. You'll understand how the company is allocating and using that day capital over time. All right. So let me pull that up. All right. So on this page, what I have is I have the balance sheet snapshots of the last 3 year ka balance sheet pasted here. Okay. So this is the one that we saw just now. Okay. If I go back 2 years, okay, the first conclusion, summary is they took some loan, they took some udhari from the bank, plus they used some of their own money, internal accruals, to fund some ships, okay, and to fund some inventory. Okay, that's the headline. And then next year, okay, they made higher profits, which they use, that is retained earnings, internal accruals, jo bhi bol lo. Plus, they use some borrowings lower ho gaye, they use some borrowings to fund their capex investments and some working capital. Okay. Third year, they did not use any debt. That means they paid down their debt, which we saw. It was all the capex was funded and the inventory was funded using their own money, internal accruals, which is again very good. Okay. And plus also there was a marked increase in payables. Okay. Because they've withheld paying off their suppliers. All right. So what you are seeing. All right. So the story that's emerging is they use a combination of debt, udhari from the bank, and their own money, that is internal accruals, to fund capital investments. Okay. And then over time, they are able to pare down their debt because they generate a lot of cash flows. They make a lot of money. Okay. So using their own profits, they are able to pare down their debt. Okay. And then increasingly fund more capital investments through their own money. Okay. Which is actually a healthy sign. But having said that, the rise in payables will have to be investigated. Okay. As to if this is not a recurring theme. All right. Okay. So this is the story that's emerging. So now I think you will have a good idea about how the company is allocating and using capital over time. Okay. So in bull markets, people totally ignore balance sheets, but it's very important that they're not ignored. It doesn't take a lot of time to kind of do this analysis. Okay. So yeah, you got to do that due diligence. All right. Okay. Now also, I know we kept a few items in the parking lot. Let's take a look at a few of them. All right. All right. So let's take a look at this item, which we have in the parking lot. This item number 14, which is current assets. Okay. So let's take a look at that. All right. So it has increased from 23 CR to 25 CR. So yeah, we are on that note 14. Okay. So here, if you see, they are saying advances recoverable in cash. It has increased from 11 CR to around 11.7 CR. Well, not a whole lot increase, but it doesn't really tell you. कि advances किससे recoverable हैं. These advances are recoverable from whom? It doesn't tell you that. Okay. You would assume perhaps those advances are recoverable from suppliers, but then there is this item which says advances to suppliers already, which is around 5 CR. All right. Last year and 5 CR this year. Okay. So that means these advances they must have given to someone else. Okay. So that needs to, in fact, I went back, I looked at the previous year's balance sheet. They don't really mention from whom this cash is actually recoverable. Okay. So again, you got to make note of these things, and if these are huge numbers, and you also need to write to the management and ask them. Okay. All right. Then let's talk about advance and supplies. It's 5 CR. Okay. But if you look at this note, they are also saying it includes 475 lakhs. That is around 4.75 CR. That's around 5 CR. Almost pura amount is due from a company in which director is a director. Okay. Matlab, this advance they have paid to a company in which inka khud ka director, inka khud ka promoter is a director. Okay. So again, and see, so this is basically a related party transaction. Okay. And in the related party transaction section of this annual report, you will get more details about the transaction. But you would expect, okay, if you want to invest in a company, you would expect that this goes down over time. Okay. All right. Because if there is a marked increase, see, there are a couple of issues with this. One is you really do not know if there is a related party transaction, if it's really happening at an arm's length, because there is not a lot of transparency, because you obviously you do not know what's happening in the other related party. That's one. The other is, see, this is actually leading to a rise in working capital. Okay. Because it's working capital, current assets really, working capital is really liquidity crunch. Okay. So this is really blocking that amount of capital that otherwise this company could have used then elsewhere. Okay. So that's why, this you would hope that this goes down over time. Anyways, right now this is really small, so it doesn't really worry me. But if this was large enough in the grand scheme of things, then this would really be worrying. Okay. All right. And then there are some balances with the government authorities that they mention, some disputed tax, that's there. All right. So this is what their current assets are composed of. All right. Okay. And similarly, you got to look at the notes of other items that we have in the parking lot as well. All right. In the interest of time, I'm not going through them. Okay. The only reason why I just went through one of them is just to kind of give you a flavor, okay, or give you an understanding of what you should really do and how you should really analyze a balance sheet. All right. Okay. Hope this was helpful. Please write to me if you have any questions. Thank you.